Hi, this is Optimus Futures, and we're back with our weekly roundup of 5 key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on 23rd March 2018, and we're going to be starting off with the S&P 500 E-mini futures market, which posted a very noticeable price movement in the past week. We obviously had a very sharp sell-off that was driven primarily due to fundamental reasons, but there were also technical aspects to the price movement that we saw for this market last week that we're going to be discussing. But to talk about the fundamental developments here, first of all, we obviously had the Federal Reserve raising the interest rates, which is usually a good sign for the markets because usually an interest rate hike stems from the Federal Reserve's confidence in the country's economy. And even though they've actually cited that they're confident about a growing U.S. economy, traders were instead drawn to the more tightening relationships of the country with China as far as trade is concerned. We've had Donald Trump, the country's president, imposing tariffs worth almost $60 billion on Chinese imports, mainly of steel and aluminum. China, in retaliation, this week announced similar tariffs on over 100 American imported products. So rising tensions between two of the world's largest economies is naturally not good for business, and the S&P 500 index is obviously reflecting that notion. The sell-off was also helped partially due to the tech sector sell-off that we witnessed last week, led of course by Facebook, shares for which dropped about 14% alone last week as a data privacy scandal for the company costed a lot of investor confidence. And we obviously had Mark Zuckerberg openly and publicly acknowledging the scandal last week. And of course, Facebook took with it a lot of other major tech sector stocks as well, including Alphabet. On the technical side of things, we've talked about this fake out that we had above this more shorter term swing high around here. We had a couple of candlesticks with highs protruding away from the former swing high, failing to post any impressive movement above this area around the 2800 round number. And since then, we've just seen price really drop right back down. It wasn't able to hold at these former highs around here. You can see we had a candlestick closing below. We had a couple of candlesticks pulling back to it, holding as resistance right here, and we just continue to push down. Once again, no support at this more recent term swing low either, and we're now just pushing further down towards this all-important swing low at the 2520, 2530 price point. But once again, going into the following week, we do believe that a lot of the price movement that we're going to be seeing in this market will be driven by fundamental developments, of course revolving around trade relations of the U.S. with China, and of course the follow-up of the interest rate hikes that we've seen from the Federal Reserve. But should the sellers stay in control, we're going to see the market push further down and closer towards this critical support that we've been looking at several times in the past, and it should really get interesting as the market slowly approaches this key support level around the 2530 area. So the next market we're going to be looking at here is the light crude oil futures market, which for the most part last week was bullish. We've been talking about the breakout to the upside on this market from this wedge pattern formation that we saw develop over the past several weeks. Eventually we had a candlestick pop out, another small candlestick that pulled back, held as support at this angling resistance trend line of the wedge pattern formation, and since then we've just seen price spring back up and now sitting literally at this major resistance at the 6600 price point. This is of course the price level that we last saw major bearish activity come to the market, and so what price is going to be able to do here is going to be significant in determining if we're going to be eventually seeing the resumption of this long-term uptrend. We already had a little bit of bearish activity come in at resistance around here. As you can see, we had a sharp bearish candlestick closing strongly, but the next candlestick was able to nullify the impact of the sellers here, and we did actually end up closing strong on Friday, which is a good sign for the bulls here, and the possibility and the potential of this long-term uptrend over here resuming itself. Again, a lot will obviously depend on whether we're going to see an uptick above this major resistance here at the start of the week. If we do, it could really set the precedent needed then for the entire week to be again bullish for this market. We also had a fundamental development for this market over the past week, where on the 21st of March, the data for U.S. crude oil inventories came out to be surprisingly low, which also helped the bulls to be able to post the momentum that we've seen for this market over the past week. Of course, the next update for U.S. crude oil inventories is also going to be very important, as traders will want to see if we're seeing a kind of a trend here of lower U.S. shale production, which could then allow for the bulls to be able to control the market for a lot longer. Technically, of course, this would mean the resumption of this long-term uptrend here, and the possibility for oil to be trading at a lot higher price levels. Okay, so the next market we're going to be looking at here is the gold futures market. We've been talking about this market as being caught up between a very important support level at the 1300 round number. We've had multiple occasions in the past when price acted as resistance or support at this level, and in recent times we've seen the level play its part as critical support for the market. Up top we have the 1350 resistance level, which is once again proven to be a very, very strong level for this market. We've had a very important swing high being posted at this level in the past, and recently we've had multiple occasions again where price roughly bounced off the 1350 level. Not precisely, but for the most part it's been around this around the 1350 resistance level, and we've seen price bounce off of that level. So yet again, for a third time in recent times, we're seeing price push back again past the 1350 resistance level. Only time will tell if this time we're going to see a true breakout of this level, or we're once again witnessing a fake breakout, and we will see possibly price pushing right back down here. But just the fact that we've actually been able to close strongly above 1350 level is possibly indicative of the fact that we could see more buying come into the market early this week. Although, like we said, we won't really place our bets on whether we think that would be sustainable enough to create a more sustained and strong move towards the upside well past the 1350 resistance level just yet. Because if you notice, in the past we actually had a similar situation around here where we had a very strong day's activity towards the upside. Price poked above the 1350 level, the day closed strong, and then after that we just lost momentum and price dropped right back down underneath the 1350 level. Here again we had a very sharp move through the 1350 level, which wasn't able to sustain itself. So whether this third attempt, which is similar to the previous two attempts, will be able to create a more sustained move to the upside just remains to be seen for now. Okay, so the next market we're going to be looking at here is the 10-year Treasury note futures market, which last week benefited, of course, from the sharp sell-off in the S&P 500 index, and of course the Fed's raising interest rate, resulting in lower yields on bonds, and hence the price increase that we witnessed last week. But on the technical side of things, we've been talking about how the market has been straddled at the 120 big round number here, and the downtrend really seems to be slowing down as prices approach this major round number. We've been talking about this entire rounding up effect that is evident from the fact that price hasn't really been able to push past previous lows as effectively as it should have if the downtrend was strong. So if you consider this low around here, we can see that the market really wasn't able to push past this low at all, in fact, and we had multiple days of price getting stuck at the 120 round number. We saw an initial bounce. The market sort of retraced back from this near-term, short-term support and resistance level, and we then saw a bullish pin bar print off the 120 round number last week. Again, the nose protruding underneath the 120 round number, but no solid close below the round number at all, and price just jumped right back up, and now we're just seeing a move right back up again towards this midterm support and resistance level. Given how the market behaves early on this week, if you see a move right above this level, it could well hold as support then and allow price to just spring back up higher. On the other hand, we could also see a more range-bound kind of a market action as price just stays tucked within the 120 round number and the 120.50-ish area that we've drawn around here. Okay, so finally we look at the euro currency futures market. Contrary to the other markets that we analyzed for this week, we'd had a lot of sharp movements post in those markets, but this market just continues to be trading in a sideways fashion. We've been talking about how the 1.25 round number right around here has played a very important role in terms of holding price up as resistance. We've had multiple occasions in the recent past when price just wasn't able to push past this level and sustain that move, and we've just seen price drop right back down. And now, just looking at the action that we're seeing here, we're approaching the 1.25 resistance level yet again. Even though we're just trading in a very sideways fashion, we're actually seeing the development of a small, shorter term wedge pattern as well, which would make things extremely interesting as price finally does hit the 1.25 resistance level again, while being within a tight confined range of a wedge pattern. So we just switch to the lower time frames. It gives off a more interesting visual of the wedge pattern that we're talking about here. So we have this sharp rising support trend line and this rising resistance trend line as well. The 1.25 round number is sitting right around here. So if we just stretch it across horizontally, we can see that the market here is just probably trying to squeeze and tighten around the 1.25 resistance level, which makes for an interesting development in terms of a potential breakout play. So whether we're going to see a move right back down once again off the 1.25 resistance level, or we're going to see a break well past the 1.25 to higher price levels, possibly then testing this major swing high that we posted above the 1.25 resistance level earlier on. Either of those situations are going to be equally on the cards. Just looking at the action that we're seeing here, of course, we're just continuing to see higher highs. So we had a high over here, followed by another higher high, a higher high over here as well, and we're now, it seems that we're on track for another new high within this wedge pattern, within this tight wedge pattern, I should say, which basically suggests that price is definitely tightening up around the 1.25 resistance level, possibly preparing it for a breakout in either directions. And that's also what we're going to be expecting of this market this week and perhaps in the following weeks.